let's monitor how the market moves on from here on itself. HDFC Bank reports a steady second quarter with deposits growth outpacing advances. Parag Thakkar, who's the fund manager, Santulan AIF, now joins in to discuss this space itself. Parag, your thoughts on HDFC Bank. Up until now, the stock had been a bit of an underperformer as against all the others. And now, with decent fundamental performance, we are seeing that outperformance in the stock price as well. I want your thoughts on HDFC Bank, and I also want your thoughts on Kotak Mahindra Bank, because there, the stock has been an underperformer and the results aren't even any better. And now as we speak, it's a sharp fall of 6%.
Sure. Thanks a lot for inviting me on your show. And first of all, I would like to make a disclaimer that both names which you mentioned and of course, many other names might be in my portfolio and my clients' portfolios. So I would just like to make a disclaimer on that. And the investors should take advice from their financial advisors or invest money through institutional investors in the market. Please don't go by my advice. So it's a disclaimer. Of course, now coming back to your point. See, I would like to highlight that what HDFC Bank has done over a period of last so many years. They have demonstrated that they stay away from crowd. So, for example, in 2008, say 5 to 8, infrastructure boom in India and commodity boom globally. They stayed away from financing infra projects and power projects, and which many other banks were doing. And they stayed away from that because, again, they felt that the risk reward was not in their favor. Same way, after COVID, after 2 years when everything settled down, they took a call that unsecured loans will be a risky space, and the pricing was not lucrative enough to cover that risk. And that call has again gone right. So I would love to back such organizations where the DNA or ethos of the bank is conservative. They might look, the growth might look muted for some time, but whatever they are doing in right direction based on the current situation. Now, after the merger, we all know that suddenly interest rates spiked up because US increased interest rates by 500 bips. In India, it was taken up by 250 bips. There was a very tight liquidity in India. Under all those circumstances, they had to navigate through. And remember, it's a 25 lakh crore advances company and 25 lakh crore deposits now. So in between, there were some aberrations in some quarters in terms of deposits and all that. But in this quarter, they have addressed all that. They collected deposits of 1,20,000 crores. They brought down their CD ratio to 100%. Asset quality, as usual, has remained pristine. I think it is one of the best asset qualities within the large cap banks, or all the banks, I would say. Because again, as I mentioned, the ethos of this bank is a strong deposit franchise. Now, most importantly, I would say that asset quality has become a key buzzword now for all financial results from here on. Up till now, in last 2 years, asset quality was the most ignored thing because everybody was just looking for growth and NIM expansion because interest rates were rising. Now we are coming into a stage where NIMs are going to compress for everyone because deposit repricing is taking place, and then might be by February we'll see a rate cut also. So here the most important thing is how you grow your deposits at a competitive cost, and how you keep your asset quality stable. And that is where HDFC Bank stands tall across the cycles. I would say that, and the other situation which I would like to highlight is that when a large cap company like this is ignored, or I would say people say that, they are not doing this in a correct manner, you have to keep faith. You have to keep faith in the management that they are doing right things, which is required at that time.
Okay.
And if you see valuations also, for example, if I take on FY27 numbers, based on what CEO said on the call, that in FY25, they'll grow lesser than the system. In 26, they hope to grow.
Yeah, just wanted to move forward from HDFC Bank due to paucity of time. Wanted to understand that you also have, the IT stocks in your portfolio. Give us a sense in terms of how you're approaching Wipro, TCS, Infosys post Q2.
Yeah, so basically, I like this space again because I like large caps which generate a lot of cash. For example, in financials, prudent lending and having a deposit franchise is a great thing to have. And of course, but in IT, large cap companies, for example, TCS, they are sitting on 55,000 crore cash, and they are going to generate 50,000 crore cash. They already generated in FY24. They'll eventually generate 60,000 crore free cash flow. And out of that, 85 to 90% is going to come back to shareholders. Market cap is just 15 lakh crores. So 3.5 to 4% dividend yield. That too, when we are in the cycle, when Fed has realized that US economy is slowing down, job market is slowing down. So they have already cut 50 bits. And remember what Powell said on that day, right? That US economy is on a solid footing and we want to keep it there. And that is why the first rate cut was 50 bits. So I'm saying when Fed is so serious about US economy and the job market, you have to buy laggards in this space. And TCS has been, because last 2 quarters have been bad. So I would say that Tata Group company generating 60,000 crore free cash flow at 3.5 to 4% dividend yield if it comes to FY26 dividend, I would love to own it. And of course, Wipro also, as you rightly said, it is not in the portfolio, but I would say that Wipro is a company which is available at 6% cash flow yield as of now, and plus they are also going to have they said on the call that they are work in progress in terms of January capital allocation policy. So if they also increase the dividend like HCL Tech did 2 years ago, there is a scope for re-rating over there also, because it is a lowest PE and lowest and highest FCF yield IT company in the large cap space.
All right. Thank you, Parag, for joining in and giving us your views on a whole host of stocks in both the banking as well as the IT space. Your bullishness on HDFC Bank continues. We take a short break, come back, get you more on the markets, individual stocks, and perhaps some more opinion as well. But as we do that, here's a small programming note. We slip into a break. We prepare to ring in the festivities this Diwali. Tune into CNBC-TV18's Market Movers Forum, 3 p.m. onwards on the 24th of October, featuring guests like Ramdev Agarwal, S. Naren, Nilesh Shah, and others to help your portfolio prosper this Diwali.